YouTube, I hope everyone is doing absolutely fantastic. It's KelFX here and I'm back with another one. So today I finally brought the video that a lot of people have asked me on the private chat, on the Telegram private chat, which was on market structure. So I had a lot of requests, I saw a lot of people asking me to just make a simple video when it comes to market structure. And market structure is very, very important, guys, because it doesn't matter what strategy you trade, whether it's smart money concepts, break and retest, whether it's supply and demand, whatever it is, you need the market structure. And the reason for that is because market structure is going to help you to establish or determine your overall directional bias. So you want to be on the right side of the markets more often than not, right? So the market structure is going to help you to do that, to establish the overall directional bias of any pair you look at. Whether you look at derivatives, Forex, crypto market, you need to understand the overall directional bias, because that's what's going to help you to be on the right side of the market. Not only that, it's going to help you to boost your strike rate, right? And that's for the exactly same reason, is you're going to find yourself more on the right side of the market, right? We want to make sure that we follow the trend, over the long haul. So, being able to understand market structure is very, very crucial. It doesn't matter what, you can understand, change of character, these two breaks of structures, entry types, but if you don't map structure correctly, you're going to have problems eventually, because you're going to find yourself actually, a lot of times not on the right side of the markets, okay? So market structure is absolutely very important. So I decided to finally come up with this video today. I'll try to make the video short and straight to the point. I think that's the most important thing. I don't want to complicate stuff. So we're gonna actually look at 3 points that I would love to talk about in this video, which is the basic market structure. And then we're gonna go towards the concept of strong and weak highs and lows. So it's very, very important, so you can understand when we're gonna have a change of character, or for what reason a previous trend was violated and the new trend was formed. And then the last point will be the multi-time frame market structure, which is very important. It's basically we're just gonna consider 3 time frames that we need as an intraday trader, right? So you just need 3. I even explained on the previous video, so make sure to watch that video. I'm gonna put right here on the description. So we're just gonna look over these 3 points before we actually do a chart walkthrough with Euro USD. Okay, guys. So without further ado, guys, I would love to remind you guys of the Discord group that we have, the KelFX Trading Academy, where you're gonna have access to the full SMC mastery course. So if you guys are looking for a strategy that can provide you a high risk to reward ratio, short period of times in the charts. I know a lot of people don't want to be on the charts for that long. They just want to be able to have a simple strategy, simple scalp that they could just come, get in and get out, right? So I actually built this course right here, the SMC Mastery course, for that reason, to help a lot of people to dramatically increase the risk to reward ratio, so you don't have to be on the chart as much. And it's very profitable, very, very good strategy. And so if you guys are very interested in joining the mentorship, I actually have the 3 months membership, which is absolutely affordable. We have the yearly also that is affordable. So if you guys are interested, make sure my contact is on the description box below. That's the Telegram direct message that you have. So feel free to chat with me anytime, and you guys, we're gonna work together, right? So that's it, guys. Let's jump right into the video. So when it comes to market structure, it's very, very important that we understand the basic, concepts of market structure. Now we have basic market structure, and then we have the multi-time frame or / complex market structure. So right here on the left, as we can see, we have the theoretical view of what is supposed to be market structure, but we totally understand that that's not how, when you go to the charts, that's not what you end up seeing, right? But this is just the theoretical view, is basically to explain that when we have a series of highs and lows and then highs and lows, this means that the trend is bullish, so price is on an uptrend. And when we have price actually breaking the lows and keeping the highs, right? So basically price right here is just violating the lows and protecting the highs. That's when we have the bearish trend, right? Or the downtrend in the markets. Now, if you look at this is the theoretical view. When you come to the reality, this is what you see on the markets, right? Sometimes you see this huge push to the upside, then you have, so many, structure highs and lows. And this is what I always say, you have a swing structure and then you have the internal structure. So when you look at this situation, for example, the reality view is this, for example, would have been your swing high, and this would have been the swing low. And then this would be the high, this would be the swing low, this would be the swing high. So whatever is happening within this range high and then in this range low, everything right here is what we call internal structure price action. So it's very, very important. We're actually going to discuss this on the next or the other topic, which is the multi-time frame market structure, but it's very, very important because this is what is going to help you to understand how to mark up your ranges, right? So the best way to mark up your ranges is to identify the structure high, the swing high, and the swing low. So for example, in this case, if you look right here, this will be the range high and the range low. And everything that will be happening within this range is what we call internal structure price action. So that is a very, very important concept when it comes to market structures, to understand what is swing structure, what is internal market structure. So the internal market structure is everything that is happening right here within this range high and this range low right here. So then price break structure creates this new high. So our range high now is this one right here. So this now becomes the swing high and this is the swing low. This is the swing low and this is the swing high. So everything that is happening right here is what we call internal structure price action, right? So we have the swing structure high, swing structure low, and there you have the internal market structure happening within that range. So it's very, very important to understand how to mark up the range. So whenever you have a break of structure to the upside, for example, in this scenario, you have a break of structure to the upside, price creates this high and they had this low. So this is your range low, this is the range high. Everything that is happening within it, that's what we call internal market structure, okay? So this is basically the simple idea of market structure. That's the basic market structure. You want to understand that we have the theoretical view, which is when price is consistently making higher highs and higher lows, we are on an uptrend. And when price is consistently making lower lows and lower highs, we are on a downtrend, okay? That's the simple concept of market structure, the basic market structure. And then we come to the next topic that I would love to discuss, which is very, very important, which is the concept of strong and weak highs and lows. Now, why it's very important to understand this is, when we're on an uptrend, what happens is that price is consistently breaking the highs and is protecting the lows. So the job of a low on an uptrend is to break the previous high. So if it breaks the previous high, we consider the previous low to be a strong low because it did its job, which was to break the previous high. So in this scenario, you have a high, you have this low. The job of this low on an uptrend is to push price to create another high, right? So this low has to break the previous high. So that's what happened right here. Price ended up going all the way up, created another break of structure. So this is what we call a strong low. Price then pulled back, created another break of structure right here to the upside. So we created another structure high. This low did its job, which was to create the high. So that's what we consider a strong low. Now look at what happens when price pulls back right here and attempts to break the previous high, but it starts to fail. So this is what we call bullish sentiment in the market in depletion. That's when the buyers are actually exhausting a lot of their positions and sellers are stepping into the market. So you can see price started to pull back and attempted to go higher to create another high to do its job on an uptrend. But what happened is that it failed and it created this major change of character. So this is what we consider a weak low, because this low failed to do its job, which was to create a previous another high. So then eventually caused the change of character to the downside right here. So now this structure high right here becomes a strong high because it ended up violating this previous low, and that's when the trend changes. So this is another concept of the change of character that is very, very important for you guys to understand. Is previously we had a bullish trend, right? Price was just making higher highs and higher lows, but then eventually price pulled back at this low, attempted to create a high high, it failed. So instead of being a strong low, it became a weak low, and then the trend changes. And this first break of structure that violates the previous trend is what we call change of character. Okay, same situation right here on the bearish trend. We saw price was making consistent low lows and low highs, so that means the price was violating the lows and was protecting the highs. So that means that this is a strong high because this job is to create the previous low. So that's what it did. It ended up breaking structure, created another low, then it pulled back, created another low. So that's a strong high right here. Pulled back, created another low. That's a strong high. But then you can see price pulled back and attempted to come and break the previous low, but it failed, right? So that means the price changed character. So this high right here became weak, right? So price just created change of character to the upside, and it started a new trend. Okay, so it's very, very important. Whenever you ask yourself, what is a strong high? A strong high is the one that does its job. On a bearish trend, it does its job, which is to break the previous low. So if price ended up breaking the previous low, this one, that means that this high was a strong one, right? So in this scenario, you can see is the price pulled back and attempted to create the previous low, but it failed. Price changed character right here. So this became a weak high, and price just started a new trend. Okay, so it's just the simple concept of strong highs and strong and weak highs and lows. Very important. Now the next, which is basically pretty much the last part of that I would love to talk about when it comes to structure, is the multi-time frame market structure. Now this is very, very important because that's what's going to help you to have the right trading, right? You want to make sure that we trade them properly, and we want to keep it as simple as possible. Okay, so when it comes to multi-time frame, I like to consider 3 time frames that is very important for all intraday traders. Doesn't matter what strategy you trade in, it's very important to keep these 3 time frames at place, which is the 4-hour is going to be your higher time frame as an intraday trader. Then you have the M15, which is the medium time frame, and then you have the M1 and M3, which is the lower time frame, and that's what we use for entries or executions. Okay, so basically we're going to look at the 4-hour, and then medium time frame is going to be the M15, which is the second confirmation, and then the M1, M3 is going to be the entry time frame. So if you guys look at this situation right here, I have this schematic example where on the black, this black line basically means the higher time frame. So this is the 4-hour right here. So let's assume you have a 4-hour break of structure to the upside, and then it leaves the order block right here. So because we want to follow the trend, which is bullish, in this case the 4-hour is pushing to the upside, we want to follow the high time frame overall directional bias, right, which is bullish. We want to wait eventually for price to come back to the 4-hour point of interest, which is POY right here. So once price comes, that's when we drop down to M15. On the M15, what are we waiting for? The structure was previously bearish as price was making its way down to the 4-hour demand zone. We want to wait for price to tap the 4-hour demand zone, and we want to wait for M15 change of character to the upside. So once you have this M15 change of character to the upside, that's the break of structure right to the upside. We're going to mark the order block responsible for this change of character. We'll wait for price to come back, and that's where we drop down to lower time frames. It can be M1 or M3. The reason why I even stress the importance of using M3 is because sometimes the M1 can be very choppy, right? It can be very choppy, very complex for a lot of people to understand, especially newbies. So I really recommend people to use M3 time frame because it can filter a lot of complexities when it comes to candles. So make sure to use the M3 time frame. So once you have the M15 break of structure to the upside, wait for price to come back to the M15 point of interest, and you use the M3 or M1 time frame. We just need the one break of structure, and then we can set our limit order right here, or you can wait for the next break of structure just to give another layer of confirmation, and then you set your entry right here, stop loss below, and our target is going to be on the long term is going to be the 4-hour previous low, right? Because we want to make sure we continue the overall higher time frame directional bias or trend, which is bullish in this case. So this will be the target, but you can always set to the next. The first TP could have been can be the M15 previous high, this one right here, and then the rest we want to make sure we finish at the 4-hour previous high to just maintain the overall bullish order flow. Okay, so I'm gonna repeat it just to sum it up. The black line symbolizes the 4-hour break of structure to the upside, so that's our higher time frame. And then we're gonna wait for price to come back to our 4-hour demand zone. So once it comes to the 4-hour demand zone, we drop down to M15, which is our medium time frame. So we want to wait for a change of character on M15, and once price returns to the M15 point of interest, we drop down to M1 or M3 for execution. So this is the simple concept, guys, of how to use the multi-time frame when it comes to market structure. We want to keep it as simple as possible, okay? So that's it for these 3 topics that I would love to talk about. Now let's do a chart walkthrough on Euro USD. So here we are with Euro USD. So Euro USD, we're going to look at it from the monthly time frame. So I want to make sure we look at it from the monthly just to understand the first concepts that we were talking about when it comes to structure, which is to outline the structure highs, the structure lows, very, very important. So if you look at what happened right here on the left, we had the previous high, price then made this low before it created before it gave this break of structure, then it created the high, then we had this low, then price created another break of structure to the upside. So, and then eventually tried to break below this previous low, but we can see it didn't really quite close below the previous low, but it just continued to push up eventually, so it created another break of structure. Now, let me mark again the new structure. So we have the structure high, we have the structure low, and then this structure high. Now, this is a very important concept that I was talking about when it comes to strong highs and strong lows. What you see right here on this bullish trend is that we had a high, we had this low, and then we had this high. This was a strong low because it did its job, which was to create another high, which is this one. Price then eventually comes back to this point of interest, which is the order block responsible for the break, and it pulls back. It reaches the point of interest, but then it attempts to break the previous high. But what happens with this low? It fails to do its job right here. So it becomes a weak low because his job was to continue to push up and create another previous high. Another break, another structure high. But when it tapped the order block, it tried, but it failed. So we can see the bullish sentiment right here in depletion. You can see another attempt when price came back. It tried. It couldn't even break this previous high, and eventually we have the trend changing right here. So that's where we have the change of character in the markets. Okay, so sometimes when you see in this scenario, when you're in this scenario in the markets, for example, let's say you don't even have the break of structure yet, but you see price consistently coming into the order block, attempting to break the previous high, failing, then it comes back, it fails again to break the previous high. This can be the sign of bullish sentiment in the market in depletion, and sellers actually stepping into the market. So we have the previous high, previous low, the previous high, then we have this low. This low's job was to break the previous high. It failed, so it becomes a weak low, and then that's when you see price violating that previous low and creating a change of character. Okay, so once you created a change of character, that's when, so let me push this to the left. That's where we had this structure. This was the structure low, this is the swing high, and then price eventually created this low right here. I think I should mark the previous low, which was this one. So the trend, the range that we were trading, actually the swing high, this was the swing high, and this is the swing low. Now, some people may want to consider this one right here to be the structure high and then this structure low because it broke this previous structure low. That's okay, but when it comes to swing structure, we can say that we have this low, this high, and then this swing low right here, right? So this will be the internal structure, internal market structure. So we had a break, price then came back to this zone to do the mitigation, then we had another break of structure, so price created this structure high and then created this structure low. Now we're trading within this range right here, this range high and range low. So anything that is happening within this range is what we call internal structure price action. Okay, so having this this trend established, I think we can all see that the directional bias on EUR/USD look from the monthly time frame is bearish. Okay, so price had created the break of structure right here, came back to this zone. This is around 50% of that range. So we can see that if we mark, for example, this range high all the way to this range low, we can see that price came perfectly around 61.8, which is the golden zone, and we found this order block right here. Okay, so once price came to that zone, we drop down to weekly time frame. We want to understand what's going on the weekly time frame. So price arrives at a monthly supply zone right here. So we can read the structure. We have the structure high, we have the structure low, then the structure high. So we can see up to this point, for example, we had a high, we had this low, then high, then low. So this was a strong low because it created another high, but then boom, we have a change of character. So that's when the previous trend was violated and another trend kicked in. So we have a change of character, price comes back to mitigate the supply zone and creates a second break of structure. So now, once we have the second break of structure, that's the confirmation of order flow shift, that we have shifted from bullish to bearish. Okay, so once price created that break of structure, so we can see that, okay, on the weekly, the overall directional bias is bearish, just like the monthly. So let's drop down to the daily time frame and understand what's going on the daily. So if I just zoom in a little bit more, we can see that we had this nice break of structure. So you guys can see we had this low, high, low. And then price was attempting to break the previous high, but it failed. It didn't close above. It just grabbed liquidity from the previous high, but then it continued to push down, right? So we had a break of structure here, full border closure. So that's to show the bearish strength in the market right here on EUR/USD. Price came to this order block and now it's making its way all the way down. So the idea is to see price continue to push all the way down to this previous low. That's what we want to see eventually on EUR/USD. We want to see price doing a continuation all the way down. Now, some people may say, okay, what is the range high and low in this scenario? So this is your range high, and this is your range low. So we traded within this range. This is the range high, range low. Anything that is happening within this daily range, high and low, is internal structure price action, and we're gonna see it on the 4-hour time frame. What is going on within this range? So let's drop down to 4-hour. Which is, as part of the multi-time frame discussion we had, we can see on the 4-hour, if we read the structure, we had a structure high, structure low, structure high, structure low, and then structure high, and then we have a major change of character right here. Price comes back to this order block, and then we see the continuation to the downside. So as an intraday trader, you will come to 4-hour and say, okay, we have a 4-hour change of character to the downside. Price comes back to 4-hour point of interest. What do we do next? We drop down to M15, okay? So let's go to M15. We can even use M20, for example. That's the same thing as M15. It's just all about filtering the complexities. That's all it is, but it's the same thing. So if you read the structure here also, you can see we had this previous structure high, then we had this low, price eventually made this swing high. So then we have a change of character, mitigation, second break of structure. Okay, so we can see that we started from the monthly bearish, weekly bearish, daily bearish, 4-hour is bearish, and now the medium time frame is bearish. So this is the M15 or M20 supply zone. This is the second break of structure. What we're waiting for is to see price to come back into this supply zone, and once price comes to the supply zone, that's when we drop down to lower time frames such as M1, M3, and we look for the entry confirmation. Okay, so guys, I hope I really made the point clear with this video when it comes to market structure. Make sure to watch this video and rewatch this video as many times as as you can, to make sure you understand the concepts. I try to simplify it as much as I could, and if you guys still have doubts, feel free to reach out to my Telegram DM. It's on the description box below. If you guys are interested in joining the mentorship, feel free. We have affordable prices on all the 3 months membership yearly, very affordable, so feel free to join. The content is on the description box below. Don't forget to like and subscribe the video, guys, and I'm gonna see you guys in the next one. Peace.